Hello everyone, starting now with the new topic reading 96, the rise of digital money. So here we are going to discuss about the different kinds of money. One money we know which is issued by the central bank, okay, the paper money or the coin. Then we have the cryptocurrency. We have the B money issued by the banks. We have the E money which is offered by the private sector, and the fifth is the I money which is the investment money issued by the private investment fund. Five different kinds of money, again I am repeating, issued by the central bank, the paper notes and the coins. Cryptocurrencies, B money, E money and I money. Now this chapter is completely focused towards the B money and I money as well as E money. Clear? Now what is B money? B money is the money issued by the bank. This is generally associated with the deposit which you will be having in the hands of the banks, and you are using that money in order to transfer or in order to make any kind of transaction. So you can do it via debit card, wire transfer, checks, net banking. So all these are the facilities available with your B money, that is the bank money. Now what is the advantage that you are using the B money? That it is backed by the government, and if it is backed by the government, it is a stable money, something which you can trust upon. Clear? But when it comes to the e-money are not backed by the government and they are not stable. Now if I'll give you the example of bank money, the money which is in your bank. Now what is e-money? The money which is in your wallet, whether it's PayPal, whether it's your Paytm. Okay, in China we have the different apps, in US we have the different apps. So these apps are basically the wallets which are keeping your money. We call them as the e-money, and they are not backed by the government. That's why it's not stable. Now what is I-money? This is the form of your money which are in the form of equity investments or into your gold or into your silver. Means you call it as a portfolio of different investment. And why they are stable? They are stable because they are backed by the asset. They have some asset at the back. Clear? So let us start with our LOS. There are three LOS. First one is about the characteristics of the e-money. What is e-money? Electronic money. That is our Paytm, PayPal, Alipay. All these are the e-money. Okay. Now what second LOS is about? What are the risks faced by the banking sector because of this e-money? You can see that if there is more and more use of the Paytm, then people are going to use the less amount of bank. So there is a issue with the banks. Now third LOS is about how regulatory authorities are coming into fact that they need to mitigate. There are some risks associated with the e-money. Obviously every money we cannot say that they are fully safe and secure. So they need to create the policies, rules and norms in order to make it strong. So starting with our characteristics of the e-money. First of all, they are not stable because they are not backed by the government authorities. Now the five risks associated with the e-money. First of all, the risk is the operational risk, that is a cyber risk, crime or cyber fraud. Then we have the liquidity risk, we have the default risk, we have the market risk, as well as we have the foreign exchange risk. So in total we have the five risks associated with the e-money. Again I am repeating: operational risk, liquidity risk, default risk, market risk and foreign exchange risk. Now from where the liquidity risk is arising? See, who is giving you the money? A private company, okay, just like Paytm, okay, or Alipay. They are giving you the money, means the transaction is occurring through them. So what if they have the liquidity crisis? If they have the liquidity crisis, they won't be able to give you the money. Default risk: if they will default, then there is a default risk. Market risk: now it is associated with the assets which they have in the backing for that e-money. And what is the foreign exchange risk? Means your home currency is different and you have received the money in some other currency, so there is a foreign exchange risk associated with the e-money. Five risk: operational risk, liquidity risk, default risk, market risk and foreign exchange risk. But this e-money have been widely spread across the many countries, and if I'll talk about the Kenya and China, these two countries are using 90% of the e-money. 90% of their population are using e-money. Via in China we know is the WeChat Pay, Alipay, and in Kenya they are using the M-Pesa. Now what makes them to use this e-money? First of all, the convenience. Okay, then they have the trust, lower amount of transaction cost. Second point is the ubiquity, means if you are having the money in your wallet, you can use it into different countries, just like we have the PayPal. Okay, if you have the money in PayPal, you can use it across every country almost. Okay, so it is giving me an another convenience that if I am in US and I want to transfer money to say Japan, I can immediately do it via PayPal, because it allows that functionality to transfer the payment from one country to another country. But via banks, via debit card, via net banking, this is quite difficult. Next is the complementary nature, means in the banking you have to do lots of tasks via the banking personnel, but e-money is completely automated, means all the transaction, every event you do over your e-wallet, that was completely automated rather than the involvement of the people in between. Next important point is the network, means if I am using suppose Paytm and there are many vendors, they are using the Paytm, so it is convenient for me that this particular platform having the huge network to transfer the payment. Clear? So there are 5 to 6 important characteristics because of which we are using the e-money: convenience, trust, network effect, low transaction cost, ubiquity, and complementarity. Next, coming to the point, what are the risks to banking sector because of this e-money? First of all, two major issues. One is the consumer protection and another is the financial stability. And apart from this, there is a privacy concern, monetary policy concern. Okay, because at the end, if you'll see that the monetary policy given by the central bank will really impact the flow of the money into the market, but they are not applicable on this private institution, those who are involved into the e-money wallets. So there is the chances that the supply of money is going to be impacted because of this e-money, the wallets. Next important point is the market contestability, means if someone will create the monopoly into the e-money market. Suppose if I'll talk about the India, there is a Paytm, and if Paytm will become the monopolist, that it won't allow any other new entrants to enter into the market. Why? Because all the vendors are using the Paytm and the customers must have the Paytm so that they can pay to the purchase from whom they are purchasing the goods. So if there is a new entry coming into the market, say Google Pay, and if you'll see, the Google Pay users are very less as compared to the Paytm, because the vendors are using more and more for the Paytm. But if the Google Pay will do some advancement, give some benefit, so that the vendors will shift from the Paytm to Google Pay, then only it is possible. Otherwise the Paytm will be having their monopoly. So this is also a threat to the market. Next is the threat to the country, means the country which will be having the very weak institution, laws and regulations, as well as very high amount of inflation. So what will happen in this case? The e-money vendors, the e-money companies, they will start creating their own monopoly, they will start creating their own market. So where people will see that the monetary policy are not at all going to impact the currency supply into the country, because it is completely managed by the private companies, those who are issuing the e-money. So we have seen that those companies in the countries which are less developed, underdeveloped, having the higher amount of inflation, will be having the huge amount of risk for the monetary policy, for the central bank, as well as for their banking sector. And even if the company is suppose from the US, so they will start dealing in the US dollars rather than in their home currency. So people will start shifting from the home currency to the dollar currency as well. Apart from that, the issue is because of the money laundering and terrorism financing, because if you look at the fact that when you want to register to this companies which provides you the e-money facilities, there is not much of the verification. Okay, yes, the small amount of data needed, but not much verification needed. And now it is decentralized, means every country will be having their own data. It is not shared among the different countries, so because of which there is a huge chances of money laundering as well as terrorism financing, and it is very difficult to verify because of decentralized data in nature. Now let us understand the scenario where both exist together, means the banking sector as well as the e-money sector, they both can exist together. But there is a issues for the banking sector when they are working together. So what the banks have to do in order to come up front, in order to provide the service to the consumers, to retain the consumers, first of all provide them the higher interest rate as compared to the interest rate what this e-money companies are offering. This is the first point. Second, offer them the best services which they want, because still now the trust are in the hands of the bank, means people trust more towards the bank as compared to these e-money financial institutions. So what are the problems they have to face when it comes to the bank combined with the e-money? First of all, they have to share the important data of their customers. Okay, because they are combining together, they are joining hands together. Second, the banks have the very good relationship with the customer, which the e-money companies do not have. They just have a service, but they don't have the customer relationship. Next, the source of the funding can be very high, because the banks can raise money at a very low cost. Means if you look at the cost of the deposits is very low as compared to the rate outside in the market to raise the funds. So it is better for the bank to increase the interest rate and to provide the services at least to the extent what e-money companies are providing. Next scenario, if they do not coexist, then there can be a complementarity situation. Now what is the meaning of this? They both will learn from each other, they both will exist and they both will learn from each other, they both will innovate. Means the feature which are there in the e-money but not in the banking money, they will upgrade themselves, and the feature which are there in the banking money, they will upgrade it to the e-money. Are you getting the point? They both will exist together, they both will improve together, they both will innovate together. Now how the e-money is taking place in the emerging market, they are actually providing the credit to the people who need money for their business, basically to the poor households, to the small businessmen, so that they can take upon the opportunities available into the market. So this is how the e-money have innovated their business plans, innovated the models, and they come up into the in the Kenya in 2008, and now they are, means among the 90% of the people of Kenya are following the concept of e-money. And the last scenario is the takeover, means e-money will take over the business of the bank, means they will start accepting the deposit from the public, they will start lending the money to the public. Means whatever the model of the bank have completely transformed from the bank into the e-money. But this is a very least likely scenario, that we cannot replace the banking system into the e-money system. There are many points with respect to liquidity, with respect to credit default, with respect to regulation, the reserves required. So it is least likely thought that they can replace the banks. But yes, they can operate together, they can compete with the banks in providing the different kinds of services, but they cannot replace them. Now coming to the last LOS, which is talking about what regulators are doing basically to support the e-money, what kind of policies they are making, what kind of actions they are taking in order to support them, in order to help them to grow into the market, because at the end they are providing the services to the public at large. First thing the regulators can do is that they can allow them the access to the reserves of central bank. Means in case they need the fund, the central bank's doors will be open for them. Second, they can keep the deposits safe by supervising them and by providing the liquidity to them whenever needed. The fee of the transfer of money interbank can be low so that they can easily transfer the fund from one bank to the another. So at present there are many regulators around the world, those who are supporting this e-money service provider, and it includes the Reserve Bank of India, the Hong Kong Monetary Authority, Swiss National Bank. They are offering the services to the non-bank fintech firms, but they must be approved. They must have the special license issued to them by the regulators and the authorities. So if central bank will be giving them the reserves, will be helping them with the reserves, so we can say that it is a form of a narrow bank system. So what is this actually? The narrow bank, they are facilitating all the payments, means whenever they need the payment they can take the money from the central reserves, means 100% of their liability will be covered by the central reserve. But there are few conditions. If e-money company entering into the narrow bank, it is that they are not allowed to lend money to the private sector. They are not allowed to lend money to the private sector just like the bank do. But what this e-money basically are for? To facilitate the transaction, the payment among the customers, okay, among their consumers, but not lending the money to the private sectors. So if they will not lend money to the private sector, then who will lend? Definitely the bank will do it. So by putting some amount of restriction, we can keep our banking system operating throughout the country. Clear? The word fractional banks is nothing but the banks who can accept the deposit from the public and use the fund to transfer it as a loan to those who need the fund. Again, just giving the brief what I have said till now, that if the country want to give some chance to the e-money companies to establish into the market, they must issue the license first. Second, they are not allowed to lend money to the private sector. They just lend the money to the small business owners or the poor households. This is the second point. Third point, their 100% liability will be covered by the central bank reserves. Clear? So we call it as a narrow bank, and because of which the banking system can also sustain, because now they are the one who can lend the money to the private sectors. So it's the duty of the regulatory authority to make the e-money system to be very sound and foolproof. So first of all, they need the stability, and how the stability will come? When it is backed by the central bank reserve to mitigate the risk. The risk includes the liquidity risk, market risk and default risk. Apart from this, they must ensure that they will not be giving huge amount of loans into the market, because at the time there is a point will come that they will not be having the funds. So in order to maintain the good amount of liquidity, they have to post some reserves, okay, the reserves which is similar to the banking system. But the reserve amount can be small because they are not lending to the private sector, they are lending only to the small business groups and to the poor households. Then the central bank need to ensure that there will not be the monopoly of the payment. There must be a healthy competition among the banking system as well as the e-money system. So how they can do? They can do by allowing their domestic e-money service provider by issuing the funds, okay, by providing more and more liquidity as compared to those companies who are the foreign companies entering into our country with the e-money services. Then we need an effective monetary policy transmission, and that particular policy, monetary policy, is favoring maximum to the domestic companies as compared to the foreign e-money companies. And the last point is the issuance of the license, as well as they need to ensure that the payment transaction will be monitored, along with the customers details are monitored, a proper KYC need to be completed from the end of the regulatory authorities as well as the company, those who are giving the registration to the customers. Apart from this, there can be the creation of CBDC. So what is the full form of this CBDC? It is central bank digital currency. Means this is also a digital currency platform by the central bank. Now here the responsibility of the central bank is to perform the customer due diligence, offering the wallets, developing the required technology, monitoring the customer and the transaction, providing the service to the customers, and offer a settlement platform. Means whatever that e-company are doing, the central bank can also do the same. Or if central bank don't want to do complete the whole process with themselves, they can combine with some private or public company in order to create the same platform that would offer the same services as the service to the e-money provider, or they can offer the settlement services as well to the e-money provider. But in that scenario, they will be responsible for the customer monitoring. But there are some issues with respect to having a partnership of the central bank and the public or private company, is that there will be the reputational risk that how public is going to react that the central bank have to combine with some private institution in order to offer the service to the public. So there will be the public views that are important. But there is one benefit, that if there is some company who is working with the central bank, then the people can trust more on that particular service provider. But if a particular company will be providing the service individually, it is difficult for the public to trust at the first. Clear? So this much is there in our reading, and I end this lecture here. Thank you.